Ethereum gas fees reportedly breached the $200 mark for certain high-priority transactions in the last 24 hours. A recent spike in transaction fees on Ethereum and Bitcoin appears to have reignited the debate around solutions for scalability and the role of layer 2s. Over the last 24 hours, cryptocurrency users began sharing screenshots showing double, occasionally triple-digit transaction fees on Ethereum and Bitcoin. When screenshots showed gas fees were as high as $220 for a high-priority transaction on Ethereum, while other screenshots showed figures around the $100 mark. Bitcoin users, meanwhile, reported fees that were around $10 for high-priority transactions. While this is relatively low, the average Bitcoin transaction cost has hovered around $1 over the last 3 months, according to BitInfo charts. BTC fees haven't been this high since May. Sayata Realty to add to below post. This isn't even height of bull run already. The gas fees are extortionate, $175.79. This is why first chance I get my basic. I thought you're available to enjoy that. I've got to be Twitter something, and if you're particular, 3:30 will go on right now, mean that at the time of writing, a transaction from an Ethereum hot wallet comes with a network cost of $45.65 for a $300 transfer on decentralized exchange Uniswap, according to a test transaction conducted by Cointelegraph. The rise in gas fees prompted proponents of Solana and other blockchains to flaunt how much cheaper transactions are on those respective chains. 1x, formerly Twitter user Bobby Appelrod, noted that Solana only charges $55 to $60 per minute for all Solana users, while each poor Ethereum user had to pay that much for a single transaction. While Sol charges only 1.2 Sol and $55 per minute in total fees for the entire Solana planet, while the median gas fee on ETH spiked 260 plus Gwei, charging each poor Ethereum user US $60 fees per transaction. Mental illness in Weld. Currently, hashtag PulseChain gas fees are 4,000x cheaper than Ethereum and 14,000x cheaper than Bitcoin, said Kaisa Crypto. The price of network fees is dynamic and as a product of demand or how congested the network is. An increase in on-chain activity often occurs in bull markets or when market sentiment is strong, but an added side effect is the impact on lower income users. How does this help the unbanked and lower income population? Lopez iterated in a post which showed a high priority Bitcoin transaction fee of $10.50 on November 9th. It now costs $10 to transfer money on Bitcoin. How does this help the unbanked and lower income population? Prior to the fee spike, transaction costs on Ethereum averaged out at $11.35 on November 8th, according to BitInfo charts. A few weeks earlier, October 14th, it fell as low as $1.40, the lowest level recorded in 2023. Gas fee on Ethereum peaked at $196 on May 1st, 2022, while fees were consistently above $2021 between August 2021 and February 2022. Bitcoin and Ethereum developers chose to prioritize decentralization and security at the base layer and offload much of its execution environment to layer 2s to make transactions cheaper. The Lightning Network is used to scale Bitcoin, while Ethereum has a handful of layer 2s specifically focused on making Ethereum faster and cheaper, such as Arbitrum, Optimism, and modified Polygon. Transactions are often less than $1 on these layer 2 networks, but not everyone agrees. It is the right way to tackle scalability. Justin Bonds, founder of cryptocurrency investment firm Cyber Capital, believes the base layer should be the only transaction environment. L2s are a terrible replacement for L1 scaling. In fact, L2s do not scale the L1 at all. If anything, L2s compete with the L1 over fees, weakening the security economics of the L1 all while delivering worse UX.
lower security and fragmenting liquidity. L2 scaling is parasitical.
So he advocates for monolithic blockchain function architectures in which consensus, data availability, and the transaction execution is all handled on the base layer. Solana is an example of this. Bitcoin and Ethereum, on the other hand, are modular blockchains because they offload some transactions to a second layer. All major scaling methods can be divided into a spectrum with 5 categories. 1, modular sidechains, Atom Dot and AVAX2. Modular layer 2, BTC, ETH, AVE, ADA3. Monolithic enshrine rollups, XTZ4. Monolithic execution sharding, EGLD, near, TON5. Monolithic single chain, SOL, BSV. However, critics have pointed to several outages on Solana due to network congestion, arguing that a modular blockchain design is a better approach to solve scalability.